The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another gorgeous edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, David White. It is December 11th, and most of you are probably in a deep freeze up north, maybe some not. But it is a gorgeous day at the head of technical trading and investing at TFNN.com. I'm here. We'll see if we can't let you hear the sound effect of some nice sun tea that just came off the porch. Just another beautiful day down here, about 78 degrees and sunny, blue skies without a cloud in the sky, just that azure blue. And you can always come down here for a great vacation. We charge lots of taxes for those hotel rooms, so we don't have to pay taxes. So come on down anytime. And, of course, today would be the kind of picture that everybody wants to be advertising. If you had the Chamber of Commerce in Clearwater, you want to be sending pictures out today of what it looks like down in Clearwater. Anyway, a beautiful, beautiful, beautiful day. And, of course, we got a little bit of market movement. It was down a little harder earlier in the day. We're off about 12 points on the S&P cash. Lows about 4 points lower than this right now, off $12.50 on the S&P cash. Is there any volume? The answer is no. 2 billion shares, so yeah, maybe we 50 million, 100 million shares ahead of yesterday. It could be. This is options expiration day where market makers go delta neutral. On those days, it is like an arms dealer selling arms to both sides. He doesn't want to pick a side. He just wants to make sure that they all keep fighting. That's exactly what the option market makers want to do. But they also want to do is take off any risk that they have for the last 7 trading days previous to expiration. And mathematically, there is a reason to do that. We'll get a little more into that in a few minutes. Today in financial history, in 1985, 13 years after it broke the 1,000 barrier, the Dow Jones Industrial Average finally closes above 15,000 for the first time, ending the day at 15,1170. And, of course, on this date in 2008, Bernie Madoff is arrested at his New York City loft and charged with masterminding a long-running Ponzi scheme, estimated at somewhere around $65 billion. Everybody, in fact, several statisticians, some that worked at the SEC, were more than willing to tell them that this was a fraud, but they said there's no evidence. That would like the guy, actually, the statistician, liked it to a baseball player who is fairly average, maybe even above average. Instead of batting 350 or 400, which is, I think, almost the record, 400 batting season, let's say that they bat, I don't know, 980 for years and years, and every year, year after year after year. You'd probably start looking at their bat, whether or not they were paying off pitchers. Certainly if you were running a casino, if someone just kept winning and winning and winning and winning, you'd change dealers, you'd change pit bosses, you'd change the deck of cards, you would change everything. But, of course, when you're working for the government, using your noggin isn't the number one priority. A lot of people, good people working in government, unfortunately, very few of them are there when we need them. No, we always seem to find the guy that is asleep at the switch. And if you watch that 60 Minutes piece, I'm going to try to remember the name of the guy's name before we left. But he showed just statistically how it was pretty much impossible that Bernie Madoff could have done what he did. The repercussions are still going on. We're kind of getting a few news stories out about how Bernard Madoff is still looking at the end of his sentence, which is, I think, another 157 years. But interesting day. When we look at Europe out here, the weakest economies, Italy, Spain, off a little bit, but for the most part, Germany's DAX off about 0.4. Wasn't a lot of volume over there today. We are starting to wind down the end of the year. I suspect that this will be the highest volume day into the end of the year with options expiration. But we'll look at it. A comment in the den, which I brought up a few days ago about bull-bear ratios, but interestingly enough. Last night, Tom O'Brien was talking a little bit about Yahoo. I'd like to get into it. Everybody's talking it up, acting like the company's doing extremely well. Is it not doing as badly as it was once? The answer is yes. Have they fired a lot of the deadwood in the company? The answer is yes. Have they gotten rid of the CEO that was like a bad rash that just wouldn't go away? Yes, they did. Now they've got a new CEO. She's sharp and she's good looking and she's got a brand new kid and she makes lots of press. And is there anything totally different about the company in the year and a half that she's been there? The answer is no. There isn't a fundamental change in the company. Has she bought some other company that came in and radically changed a great deal of what Yahoo is doing? The answer is no. They've bought maybe a couple of dozen, maybe 24, maybe 30 small companies and sites. About half of them they automatically closed down, took the people and brought them into the company. But have you heard about Ghostbird? How about Big Noggins? I said, I'm going to say that again in case someone got that wrong. Big noggins, like a head, just in case someone thought somebody was doing it. There's a little bit of that. Somebody in the den says she's good looking, so she gets a pass. She is very smart and she is very sharp. She is not she's not there for the wrong reasons. But I will tell you the reasons that she is there. And all the other stuff is absolutely great, because you're not going to call this good-looking girl some horrible names like you are Steve Ballmer at Microsoft. People will think you're beating up on a good-looking girl. So what's going on? It is always, especially when you have a dog of a stock that's done nothing for years, like Yahoo, that's been horribly managed by the founding CEOs that will not leave even though they keep running the thing into the ground. Well, in 1995, Yahoo, of course, flush with cash, decided to invest in a startup in China. That startup was called Alibaba. It is a combination of Amazon, eBay, PayPal, and other sites all rolled into the one. In the vernacular of the late 90s and early 2000s, it was called a web portal. And again, it is the web portal for China. They do a horrifically large amount of business for what they do. There are some problems with in the Chinese market, which is they don't have the same kind of mail system that we grew up here with. So they have to have their own delivery companies that they have to rely on. It is somewhat how can I say it? Combobulated, because everybody thinks people in China speak Chinese. Well, there's several versions of Chinese, and depending on where you go in the country, they have their own dialects of those different versions of Chinese. So you have to. There's a lot more to it. It is a vulcanized kind of country. Everybody thinks it's one Chinese for everybody. They got, of course, Mongolia, where they get most of their rare earth minerals. But what we're looking at in Yahoo is basically a company that is being run very well by people that have been stuck in it for a very long time. And what you're going to see is Alibaba is the biggest IPO. We've talked about ones here like Twitter and the rest. This one is going to pretty much dwarf the rest of these. Right now, they're looking at a market cap of somewhere around $100 billion. They've got everybody fighting over who's going to get this one. We're going to talk a little bit about it when we come back. Should have some music here. Oh, no, we don't. I'm on the wrong clock. I'm sorry. I thought we didn't have any more time. We've got 3 minutes, so I can finish this up. No wonder I thought this segment went so fast. Anyway, when we talk about companies going public, there are 24 companies in a company going public today, and that is the retail hotel chain. We'll get into that in a little bit. They upped their mark on it. And is it Hyatt? I think it's Hyatt. I'll have to go back through my notes. But this is going to be the pig trough of all pig troughs. And when I say that Yahoo is all about Alibaba, that's it. In fact, a lot of people were hoping that they would spin off all of Alibaba to existing shareholders so they wouldn't be stuck with Yahoo when this thing splits. The CEO decided, you know what, that's what everybody wants us to do. Unfortunately, it's going to be horrible for me as a CEO because no one's going to give a rat's butt about what we do after we get rid of Alibaba. We cash in on this giant IPO, and then we start making the shares come out. So she also thinks that maybe they can get the stock price higher, and she can slowly dole out and be an operator themselves of the Alibaba stock. But we're looking at $100 billion and them raising $20 billion maybe at the IPO, if not more. But right now, we've got the London Exchange, we've got the NASDAQ, and the NYSE, plus some other exchanges around the globe, all fighting to get this giant behemoth of a company. But if you can think, if someone would say, we're going to have Amazon, we're going to have eBay, PayPal. We're also going to have some search engines, so it's going to be a little bit like Google. We've got a government that's not going to let anybody really come in and compete with us. So we don't have to worry about people from outside the country. All I have to worry about is paying off the right people in China, basically leaders, hiring the right people, all their sons and daughters, and putting this thing together. And at the same time, we can get those guys over there in America to cough up lots of bucks to us. It just doesn't get any better if you're from China. Most people don't know that when you get over into that area, when you talk about racists in America, they don't have anything on us when it comes to the way that they think about China and even Japan to some degree. We'll be back in just a minute. We'll talk a little bit more about Yahoo and get into some other things.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, just wanted to wrap it up on Yahoo. I'd love to have a phone call from anybody that started using Yahoo any more than they used before, started buying anything more than they used to, started doing anything that would have any higher revenue for Yahoo. I have yet to bump into anybody that did it. And normally you're going to hear some news, you're going to see some press articles. They were able to get rid of a lot of dead wood. A lot of companies that are on the brink of going belly up can do that for a while. We saw RIM go from about $6 up to about $16. Of course, it's back down at its lows again. We are seeing probably the same kind of model happening in Groupon right now. They're fighting to keep that thing over $10 so that they can continue to sell it ad nauseum to anybody that will buy it. And of course, once it gets under $10 for a while, like Groupon, you're going to see everybody start dumping it to stay under the risk parameter set up by Dodd-Frank and the model that actually sets that up. Of course, stocks under $10 have such high volatility that you could own several other companies at $20 with additional leverage, and that's what most of the big guys of Wall Street will do. So once it's under $10 for about 3 months, you'll see normally they will absolutely crater. What is it, BBRY? Let's go ahead and pop one up real quick because I was talking about this contemporaneously when I said this was one of the Walking Dead stocks, BBRY. BBRY. Of course, this thing was making new lows yesterday, up a little bit today. But you'll almost always see these things when they break down around that $10 level. Try a few times to rally. Normally phony and for just BS press statements, and eventually it will come down on heavy volume. That will be it, and it will be the liquidation of all liquidations. Sometimes you just can't get out of a stock like this if you have a huge amount without pressing the price down. Even worse. But we're looking at the last days of BlackBerry, Groupon GRPN, isn't it? Groupon GRN. Groupon G, what is it? Groupon GRPN G Group 1 GRPN. Oh yeah, it is. Anyway, we're seeing this thing do the same kind of thing, doing the death rattle right around this $10 mark. They fought to get this thing back up into this $10 mark, and of course it was an IPO, and a lot of people that had it weren't in the bigger funds. Now is the time to get at least a few of those funds to come in and buy some of these shares of this dog stock. Same kind of thing when you find a company that is doing poorly. You hire a bunch of people to come in. They can, for a very short amount of time, maybe 6 months, maybe a year, maybe a year and a half, fire, not pay, do everything they can to get the books looking fairly decent, and invite a few more people in. My question would be, has anybody actually started using Groupon more in the last 6 months than they were using it before? Again, I talked to a lot of people during my travels around the area, and it is somewhat apocryphal, but nobody I know really saying Groupon has turned my business around. I'm buying lots of things, more than I ever did from Groupon. Were they able to clean the business up? The answer is yes. Is there still a fundamental flaw with the business model? My answer is yes, and that is there was no barriers to entry for anybody else doing the same thing. If you make a lot of money doing something, everybody's going to see it, and they're going to want to duplicate it. Hopefully, if you're Microsoft, you've got all these programmers, you've got years of advanced work that they can't shortcut. They can't just buy, can't go around. There's nothing but acquiring that intellectual property themselves to do it is a great business model. You're always going to have a lead. And as long as you don't get fat and sloppy, you'll be able to get along. Groupon, the problem is in about 2 weeks, you could have built a Groupon website and got right in business doing the exact same thing. Many other people, including Living Social, did the same thing. So as a business model, we talked a little bit about the razor blade marketplace. One of the other things is just how easy it is for other people to get in your same business. That is the fundamental flaw with Groupon, GRPN. We'll be back in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, a couple IPOs priced. Let's get to that actually here. Valero Energy Partners priced the IPO at $23, so probably look at it coming out tomorrow. I suspect that they're going to support the market fairly well. There's several IPOs coming out. The other one is Auto Home. This is the auto website from China. It is above its revised price range. It's $17. We also have an orgy, pigs at the trough, fuming and going after the IPO that I guess it's supposed to be tomorrow, is Hilton. So we've got a few things going on, but I suspect we're going to see a fairly flat market, or 1,800 on the S&P tomorrow when Hilton hits the bricks. There are 24 different street names involved in getting and kicking this IPO out. There's basically going to be sticking out a lot, and billions and billions and billions of dollars. And it's going to be a great day on Wall Street because this is the last big check that they should get this year. But all these M&A guys that push that side of the market are going to be pretty fat and happy when they get the checks the end of this month. for this deal. But I'm not thinking that we're going to see the market really effectively move down very far. And again, a lot of this, I think, movement today is probably going to be repaired in the next couple of days. Remember, next Wednesday, the Fed's going to come out at 2:35, or excuse me, 12:35 in the afternoon Eastern time. And until then, we're probably going to start seeing volume, I would suspect, late Thursday really start to tail off. We're going to be on the wait for the Fed. And I just think we're going to have a lot of shorts that are going to slowly get squozen out before the Fed announcement next Wednesday. One of the other things I talked about to somebody in the den yesterday was what options are telling us. Right now, if we don't see a vast change in this marketplace, the options are pointing to one of the narrowest ranges for expiration. That would be about 16,000 on the Dow. It would be pretty much about 1,800 on the S&P cash for a week from Friday. I think that would then take us into probably a low day where maybe we see the S&P up maybe a couple of points every day into the end of the year. Looks to me like from the options going into January so far that they're expecting this market to come out at somewhere around 1820 to 1825. For the new year. So extremely narrow ranges are being pointed to by options expiration and the new options and existing options and their spreads for January. Again, if you haven't listened to the show before, I've made some predictions on where options say we're going to expire. That is by where the most amount of money was going to be lost. Options are set up very much like insurance. They're not meant for you to win a lot. They're meant there for when you lose. They are set up exactly the same way life insurance and house insurance is set up, not meant to be a moneymaker. But you're going to find out that for it to truly work, options need to be right about 85% of the time. That's almost exactly the same kind of odds that are set at a pari-mutuel track for horse betting, dog races, everything else. The last 15% is pretty much the rake that goes to the location that's putting on the event. That's pretty much the exact same thing that goes on in the stock market. Most people don't, this came to the markets maybe in the last 10 or 12 years, don't remember a time when there weren't options. For the most part, options market makers were kicked to the curb and literally standing out in the rain in the street because no one wanted to have anything to do with them. There was no easy way to actually price options effectively. Of course, the Black-Scholes model came out, and then suddenly there was a way to actually mathematically go back and put a model together that would give that 85% win rate for option market makers on the whole. That number is about correct, which is 85% of all options go unexpired at expiration day, at least in the United States. That doesn't bring up the times, the last 15%, where people are actually not just making their 1-to-1 win back, but are making 10-to-1 or 20-to-1 or 30-to-1, which does happen on the very edges. It's called the fat tail. If you think of a standard bell curve, instead at the very bottom, and this is not the way statisticians explain it, but it's the way I do. Think at the very bottom of that curve, on the edges of the bell curve, where it just starts turning back up at the edges. And that's kind of what happens when you get to the end of it. Options and statistics, for the most part, are right about 75% of the time. They're wrong about the other 25%. Of course, it depends on what you're trying to predict. But at the edges, the farther you get to the edges, the farther that a lot of statistics will break down, and that is the fallacy, long-term fallacy in options. So why 85% go exercised at expiration, how much money do the last 15% make? And if you do it right, you can make some fairly decent money. But what we do know about the way that these options are pointing, they are looking at the lowest right now expiration width that we've seen in about 15 years. You think private equity and Wall Street money trickle down to us paupers? No. I think they've got a little filter like a coffee filter, and that all that's going to get through is that clear water. The wonderful tasting coffee, no way is getting through that filter to us. But it is one of those deals where we're, when not a lot is going on, we're kind of pressing the lows of this market today, off 14 points, but there just isn't any volume, 2.2 billion shares, as we almost wrap the show up. Which means we're probably going to come out with 2.9 or 3.1 billion shares on the day. That would be probably even optimistic. So down on very light volume. IPOs tomorrow. Unless we get some kind of huge news out of this market, I expect us to close somewhere around 1,800 on the S&P cash tomorrow, and probably go sideways into next Wednesday. Again, a very light volume each day, probably getting lighter, probably going to have a decent volume next Wednesday after the Fed announcement, and then that's probably going to be it for the end of the year. So when we look at it, that is going to be Wednesday the 18th. That's going to probably be the last day of effective trading of the year. From then on, we can see people that are short slowly probably trying to migrate out of it. We can also look at other kinds of selling brought on by the end of the year. One of those would be if you're in a bad position in something that's taken a horrible hit, let's say like gold, will there be pressure coming into the end of the year to do some tax loss selling? If you sold gold today, you'd be able to buy it by about the 11th of January and not run into the IRS man telling you that you had a wash sale. So the question is, are we going to see some of these positions that are on the downside, gold miners, be under pressure for the rest of the year? My guess is that that's certainly not going to be a tailwind behind any of these gold purchases. And, of course, probably a lot of people in gold, shorter-term traders in the metal itself. I think the bigger problem would be these miners and the tailwind coming in behind these miners. But when we look at the gold equity, this thing came down, got into the bottom, came into it with much lighter volume. Right now, probably a 50-50 chance that we have a bottom in. Probably too much for me. I don't like a coin flip. I'm going to wait for that 114.68 tick on the GLD. But when we look at people that are on the wrong side of the marketplace, especially Paulson and his gold fund, have these guys been washed out? I continue to think that we're going to see a giant washout in commodities. I've been talking about that for at least probably a month or 8 weeks. I see that Sprott, the guy that owns several of the exorbitantly high ETFs that are charge a huge amount of funds for being in their ETF, certainly not the percent or 0.5% or whatever it is on the GLD. Certainly have they're out there talking up end of the year tax selling. And I'm just wondering if tax selling isn't over already. Maybe that's where we've seen this little bounce. The question is whether or not there's anybody else left out there that hasn't capitulated in gold. Not a real clear signal yet so far. When we look at today's volume down, lighter volume, could we meander around these lower levels for a while? Yes. And when we look at gold itself, fairly very strong resistance levels at about 1270, 1275. So when we got about $15 higher, actually they're off $8, I guess, now on the gold market. How many of these days are we going to have or a lot of people that are in gold that bought the last bottom at 1275 are going to just be glad to break even or even just take a small loss. Maybe we saw a little bit of that today. So there are organic reasons for buying and selling in the market other than just thinking that the stock is going to be higher or lower in a week from now, a day from now, or an hour from now. Some of those are taxes. Some of those are other reasons. And, of course, gold continues to be one of the biggest hedge is in a marketplace. There are several hedge funds that just continue buying gold all the way up. As the market goes higher, as the market comes down, they will sell gold. Kind of counterintuitive. But if we were starting to see a market bring down and come down, could be fairly problematic. And if we see gold selling at the exact same time. Most people didn't hear it, but Tom O'Brien had Jim Sinclair on TFNN early on in the gold run. Should have been 2001 or something. I played in the den the original interview that Tom did do with him. One of the things that he said, and I went back and checked back into charts early back into the 60s, has been that probably the best thing for gold has always been a market that's going sideways. We saw this little rally come out when the market, for the most part, wasn't doing a whole lot. But markets that are down don't tend to see a huge move in gold. When they're up, they don't. What you really like to see is a dull equity market to really move a gold market. That would probably be the positive over the last 10 trading days of the year, and that is if this market does just go to sleep at 1,800 on the S&P cash, maybe you can see a little bit more push. Again, my targets are about 1270, 1275, where I suspect we're going to have a lot of sellers start to come in. Maybe we've already seen that already. Plus, tax loss selling for those people that think that maybe 1260, 1265 is about all they're going to get out of gold here between now and the end of the year. Of course, the big wild card is next Wednesday at 1230. We may just see this market, including gold, including some other commodities, go to sleep. One of the other ones on the move today was crude. And where is that little Mr. Crudy out here? Do I not have it on my list? No, there it is. Crude is off $1 today. It's probably up against fairly hard resistance itself as a commodity. Probably $100. A lot of people wanting to sell it. I've noticed a lot of technicians have also been talking about selling gold at 98. Probably not a good signal. I'd love to see gold break through 100, maybe to 102, wash out all the shorts, which there are a ton of them right now in that commodity marketplace, and kind of blow everybody out. And then roll back over. It may be, just going into a cold winter and maybe even some war drums beating in the mid-east, enough to get this thing up, run the last of the shorts out of crude here, and get in the last leg where we might be seeing this come back down into the $80 mark on crude. Anyway, we'll be back in just a minute. You can always give me a call, 877-927-6648, and I'll check my email during the break in case you've sent something to me. Well, we did have something. I've got some mail. We'll talk about it when we come back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind. Absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as always, you can call at 877-927-6648. But if you can't go on the air, or maybe you just like to ask a question and listen to the answer later on the archive show. And, of course, you can always catch my show on Channel 14 on Tiger TV or the radio archives, either one. But occasionally people email me at PATH, that's P-A-T-H, at TFNN.com. When I have time, I will try to answer those questions. Anyway, we got I think someone emailed me today.
You've got mail.
Yes, I do.
You've got mail, baby.
Yes, I do.
I got mail. Yay! I got mail. Yay!
Yes, I got mail. Anyway, Ed gave me a email here, and basically says, what are we looking at in the way of these space program companies, voyages to Mars, all that kind of stuff? Kind of like investing in biotechs. It's all going to be all or nothing. One of these things blow up on the pad with 3 astronauts on it. Probably going to be a big deal. That's why I don't like investing in all these all or nothings. Early on in my career with the company I worked for in the 90s, they had to sell to a handful of cable companies, maybe 3 or 4 different cable companies. Ended up being 80% of the company's business. One thing they didn't want to have anything more when I came on, and they set me at starting new businesses, was saying, we don't want any more one customer kinds of businesses. We want to be able to get to a lot of different customers. So it's not feast or famine. And, you tick off one guy at Comcast, you never get a sale again just because he's going to be a yuck. Or if you don't quite bend over fast enough for him, he'll make you pay for years to come. And, of course, our company was a spinoff of Scientific Atlanta, big into the cable box industry, a set-top box. But I don't like all-or-nothing companies, and Space Shots are just that. You get one all-or-nothing every month, and, you kind of like the cruise ship business. You got a lot of cruise ships out there. Even when one hits the ground and 40 people die, you got a couple hundred other cruise ships where that didn't happen. Unfortunately, not a lot of news, and of course, nothing could be better than a Roman candle on the launch pad with 3 or 4 astronauts in it to put a bad hurt on your trade when it happens. I just don't like the risk reward in that kind of business at the moment. But interesting nonetheless. Again, you can always give me an email. I'll be here tomorrow, and if you have some things I'd like to answer. But we're just talking about a few things today. Of course, we're off 14 points on the S&P cash, 2.3 billion shares, just not a lot of volume down at here, which makes me think that we're going to have a little bit of tough issues. What you probably want to be looking at here is stocks with very high short interest rates. If you're going to try to make any trades out here before the end of the year, I'd be looking at a lot of those for some easy trades off of Wednesday. If this market starts to rally or does not at least go down, you can see probably a couple percent, maybe 3-4% in a lot of those stocks. As volume continues to drop, you can see these stocks move up slightly. But I think probably we may be over, at least in individual stocks, any kind of large money making till the end of the year. I hate to do that, but it's, there are always opportunities, probably more opportunities in commodities over the next few weeks than anything else. General Instruments. Me personally, no. I know that General Instruments and some of those other companies we did do business with, but that wasn't really my bailiwick. It was all special effects and graphics, that kind of stuff. For that, most of the stuff that our company made was black markets.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.